Hello and welcome. So today we're going to be looking at labour markets and we're going to continue looking at specifically labour market failure. So last lesson we had a look at different types of labour market failure and today we're going to be looking at specifically discrimination in the labour market. So firstly we need to have a look and see what does that actually mean. So what do we as labour market economists look at for discrimination? So basically what we are saying is that labour market discrimination is when firms have labour market decisions, so they make their decisions in the labour market based on characteristics of human capital rather than human capital's actual ability to produce any output, right? So they're making their decisions on the labour market on characteristics that have little or no impact on the actual output that unit of human capital can produce. And obviously we know that that's going to lead to labour market failure and we're going to go through today what that means. Now obviously when we look at discrimination in the labour market, you should know and you will hear a lot about gender and race and sexuality and pregnancy and those kind of defended or protected characteristics that we have in the UK at least and lots of different economies across the world. But when we actually look at discrimination from a pure economic point of view, we mean any characteristic at all, right? So that could be nepotism, that's a form of discrimination in the labour market. It could also be class, like you're being discriminated based on your class background, those things as well. We are going to look at gender a little bit later on in the lesson, but just bear in mind that it could be any characteristic that doesn't affect your actual output ability, but a firm or an individual is making a labour market decision based on. So why do we have discrimination in the labour market to start off with? Well, it has a lot to do with information gaps and more specifically it has to do with asymmetric information gaps. So if we kind of think about Akerlof a little bit here and that can definitely be applied to the labour market and we have to kind of break it down and have a think about what is actually happening and what are firms and what are labour market kind of outcomes or desired outcomes to be in any market at all. So firms are profit maximisers. We know that firms are profit maximisers. That is an assumption that we make in economics, is that firms are profit maximisers and therefore they obviously want to have the lowest cost for the maximum output. Now that doesn't mean that they want the cheapest option. It means that they want the lowest kind of cost in regards to the highest output, right? So overall they want lowest cost to gain the highest output. The cheapest option doesn't necessarily mean that you're going to get a higher output and therefore that wouldn't lead you to profit maximising, but it's the lowest cost for the best, like the maximised output. And also equally we have to assume therefore that they are risk minimisers. So they're going to minimise their risk in the market in order to profit maximise. And this is especially true when we look at labour market decisions. Because there's a problem in the labour market and the problem in the labour market is asymmetric information. So a firm is hiring a unit of human capital. And that unit of human capital that is going to be employed knows more about their ability to produce output than the firm knows about their ability to produce output until they are employed. So the firm only knows how productive an employee or a unit of human capital is after they have employed that unit of human capital. So there's asymmetric information. The unit of human capital knows exactly how kind of much output it can produce, but the firm doesn't. And even though they might interview, they might check your CV, they might have qualification kind of boundaries to the market, barriers to the market, you might have to tick a lot of kind of boxes to enter to do with experience, references, all of those things, still there is asymmetric information in the market. So despite the market creating some kind of way to minimise the amount of asymmetric information, the amount of asymmetric information might have fallen, but it's still definitely some asymmetric information there. And firms are looking in any way to minimise the risk because if they spend time and effort and money and employ a unit of human capital and they make the wrong kind of business decision, then that can have a huge impact on their overall profit, depending on the rank or role of that individual. And also you think about how long there is a time lag before the business is aware of the output of that human capital. So it might take 3, 4, 5, 6 months, however long, sometimes years, for them to understand and be able to get a read on actually the output, because of the information gaps, the output that that human capital is being able to give them. And equally, they might be even more risk minimizers if there is labour market intervention, government intervention to the labour market through labour laws of not being able to fire somebody without kind of meeting a lot of criteria, etc., etc. So that then just means that there's even more incentive for them to minimise their risk. And that leads us to kind of where did the kind of economic idea of discrimination may come from. They're a risk minimiser because they want to maximise their profits. So what this might mean in the labour market is if a firm has a perception about a certain characteristic, because they're looking for anything to minimise their risk, right? Because they're profit maximisers, as we literally just went through. So if they perceive a characteristic to be a signal of quality, then they are going to use that to inform their labour market decisions. And equally, if they see a quality or a characteristic that is going to negatively impact that kind of unit of human capital's productivity, then they're going to avoid hiring that individual at the same price level because they're worth less to them, right? And by what I mean by that is, if, say, for instance, you're in a situation where there is gender kind of characteristic bias in a market, right? So there is kind of preference, or there is a perception that males just by nature have a capacity for higher output than females, right? So in that situation, then you've got males have a characteristic that means that the quality of their labour is higher, and females have a characteristic by nature that the quality of their labour is lower. So if you would decide under that situation that female employing females, well, that is going to mean that to get the same amount of output, it's going to cost you more because you're going to have to employ more women for longer, right? So therefore, your marginal cost is going to be higher if you employ that individual who has a characteristic that has a negative impact on their quality of output. So therefore your marginal cost is higher, which means that your marginal profit is going to be lower, and your overall profit is also going to be lower if you employ the individual who has that characteristic. But obviously we know that that's a bias, and that's going to lead to labour market failure, because actually what is happening is you have this kind of bias idea of this characteristic informing quality of output that is quite simply not true. Whether, again, I said that that's classism, whether that's racism, whether that's to do with your sexuality, your perceptions on gender, any of those things, any characteristics, whether somebody has, blonde hair or has a certain eye colour, any characteristic whatsoever is informing your labour market decisions. It's going to split your labour demand. Because up until now, we have been assuming that labour demand is equal for everybody, right? Because you just employ a unit of human capital, and we've made quite a large assumption that that unit of human capital is homogenous, right? It's exactly the same. It doesn't matter who it is or what it is, as long as it meets the criteria. All human capital in the market is homogenous. But actually what this introduces is the idea that they are not homogenous, and that actually labour demand might perceive them to be that they are not homogenous. So what impact does that have on the labour market itself? Well, if you have a different perception of the ability by characteristic of an individual, right? So for instance, if we take gender. So if you think that your male employees, if you employ a male, they're going to have a natural higher output than if you employ a female. Or if you employ somebody who is a middle class, they're going to have a natural higher output or natural capability that is higher than somebody that is working class. well, then your demand curve or your demand is going to be completely different for those two groups, right? You have a preferred group and then you have a discriminated group. So say, for instance, your labour demand from the firm or in the industry, the market as a whole, looks like this. So this is our labour demand for our preferred group, right? So let's say that that's individuals from middle class backgrounds, right? So your labour demand for individuals from middle class background looks like this. Now your supply is constant. Your supply from labour market from both of those individuals, whether they're working class or whether they're middle class, is stable, right? You have the same amount. They respond to the market the same. We're making that assumption for now. Well, that means that we have here a quantity for your labour demand preferred group, middle class individuals, and you have a wage equilibrium for them too. And this is for your labour demand for your preferred group, right? So you have a wage equilibrium and you have a quantity equilibrium for those individuals who are from a middle class background. So if you perceive those from a working class background, in this example, to that characteristic of being from a working class background, being a negative input on their output, right? So it has a negative effect on the ability to produce output. So just by nature, they are less productive than their middle class counterparts. Well, then your labour demand for that group, working class individuals, is lower, right? It's going to be lower. At the same wage level, you want to employ less of them because you think it's going to cost you more and therefore you're less inclined to be able to want to employ them, right? So at the same wage level, your labour demand for your discriminated group, in this case working class, is going to be lower. Right? So at the same wage level, you want less of them. You aren't as willing to employ that many of them. So here is your labour demand for your discriminated group. Well, as you can see here, we have a different equilibrium for that group, right? So we have a quantity for the labour of discriminated labour group, like I said, working class backgrounds in this example. And we also have a different wage equilibrium for that group as well. And that wage equilibrium is lower and there's less employment opportunities for those individuals, right? So if those individuals are supplying labour to the market, they have less opportunities and equally they're paid less. Now, obviously, this is a market that has no government intervention, right? We are assuming there is no government intervention. We assume there is no Equalities Act. All of those things are government intervention. At the moment, we're just looking at what happens in the market by nature, right? So under free market, if there is characteristic bias, discrimination in the labour market, what will happen to the market overall? So we know that this can't necessarily be true, though we will have a look and see actually how it's still slightly true. But it's less likely to be able to happen, and if it does happen, the gap is likely to be a lot smaller because of the government intervention in the market. But so just by free market economics, just under normal market mechanisms, we have two wage equilibriums and two quantity equilibriums, right? But that's just us splitting the market into two. Very, very simple example. Actually, what happens is you end up having almost individual labour demand and individual wage equilibriums and quantity equilibriums as well when you look at working class, race, gender, and obviously a lot of those individuals are not in just one of those kind of categories or don't face the same issues as just one of them. You know, if you're a black female, then you have a completely different wage equilibrium to a white female counterpart. So it becomes incredibly complex. And the main kind of thing that we really need to touch upon is, why is that actually labour market failure? Why is that a failure of the market? quite clearly that's a failure of the market, because you're not making an output kind of decision where you're not going to be able to reach your maximized output. You're going to be working inside your PPF curve because you're not utilizing your resources properly. Remember that human capital is a factor of production. So therefore, if you are not using your human capital effectively, efficiently, and to its maximum, which would be without bias, you're not using characteristics to inform labour market decisions, you're using output to inform labour market decisions, then that would lead to market failure, right? Because you are also not allowing your resources, your labour market resources, to access the areas of the economy that they absolutely need to be in. And therefore, you're going to end up with huge amounts of market failure in the labour market, and that has a huge roll-on effect because labour is a factor of production. So your output is going to be less, your kind of prices are going to be higher, your efficiency in your economy is going to be much lower if you have large labour market discrimination, labour market failure, because the goods and services that you're producing, it has a knock-on effect on those because it is a derived demand, it's a factor of production. So it leads to a huge amount of market failure in other areas of businesses as well, right? So it leads to market failure in the labour market, but it's going to lead to other kind of overall market failure of other industries too. So the kind of question that you should be asking yourself is this real today, right? So obviously I've been able to find a lot of information on gender. There is a load of information on race and sexuality too, but I'm just going to touch on gender because I said at the start of the video that I was going to do that. So recently the UN, I think this was last year, released their gender social norms and report, and I mean, like, it's quite frankly really terrifying. It's a terrifying read. But this is a kind of a few things that came out of it. So the first thing that came out of it is that 25% of people, and when I say people, I don't just mean men, women and men were interviewed for this, and their gender norm perceptions were kind of used. So there is like this, I think, a huge common this idea that it's just not correct that like women aren't able to kind of express gender norms, or ethnic minorities aren't able to express gender norms. Like, if they're a part of your society, then they're a part of everybody. So women and men both had the same kind of perception, and that is, so 25% of the UK, so that includes women and it includes men, thought that men should have more of a right to a job than women, right? So not even they're better at it, not even that they can produce more output, not even that they're more suited to those job roles, no, just that they have more of a right to a job purely because they are a man, right? So purely because they're a man, they have more right to a job than a woman, and obviously this has huge impacts on the labour market. All data is variable, like all data has different interpretations, and we don't know, you can't make an assertion that those 25% are making labour market decisions, but you can also make an assumption that 1 in 4 there are going to be some individuals in that group that are going to make labour market decisions. Equally, it found that around the world, 40% thought that men naturally made better business executives than women, which is worrying because there's actually been a lot of studies that have shown that the characteristics that make good business executives are found equally in men and equally in women, and actually there's a lot of cases that say that it's found more naturally in women, but I mean, most kind of studies agree that they are at least equally found in men and women. And obviously the Harvard Business Review found that a 30% minimum women at C-suite level, so if you have women executives at C-suite level, led to a 15% increase in your profits, right? So a 15% jump in your profits to when you previously had less than 30%. I mean, that's huge. That is, you have to have really ingrained characteristic bias in your society to kind of still retain any form of characteristic bias when you have these kind of numbers in front of you. And also women-led entrepreneurs, right? So entrepreneurship, so women-led enterprise, deliver 35% higher returns on average. So this is all from the Harvard Business Review. But 86% of venture capitalism still goes to male-led enterprise, right? So women-led enterprise is just not getting the same access to resources as male-led enterprise, which is market failure, right? You're not allocating your resources efficiently. And there is lots of information to do with race as well, and also there's a lot of information to do with class, there's a lot of information to do with sexuality, and like I implore you to go and have a look at those things as well, and also to read the Gender Social Norms report, because it's really, really fascinating, and it goes into a lot of kind of labour market perceptions specifically, which is really, really interesting. So the idea of how much we actually invest in training for men compared to we invest in training for women, because it's potentially seen as kind of like a wasted resource, because you have to pay more. If you think that the ability of an employee is naturally lower by a certain characteristic, then you have to invest more in them financially through training to get them to the same level. So if you want to be as kind of cost effective as possible, you want to invest in the smallest amount of training to get the biggest amount of outcome. So if you have a perception about a characteristic that leads to outcome, then you're more likely to invest in training for those individuals as well. It's really interesting. So the last thing that I kind of wanted to have a look at is some kind of key information. So we hear a lot about the pay gap, and it's very interesting, and it's useful to a certain degree for us to have a look at pay gaps, whether that's gender, whether that's class, whether that's race, whether that's sexuality, whether that's maternity, any of those things. It's really useful for us to have a look at pay gaps to be able to see what is happening as an overall picture, right? So you might take a firm with, say, 100 employees, and you look at the average wage level of women and the average wage level of men. Now, obviously, you don't know what jobs those individuals are doing, and therefore it's highly kind of criticised as the be-all and end-all. It definitely shouldn't be the be-all and end-all of the research that you're doing or the way that you're looking at labour market decisions. Something else that's really useful for us to use when we look at labour market decisions and discrimination in the labour market is to actually look at underemployment, right? So to look at individuals' kind of qualification level and see whether that's matched to the job that they're doing. So if you have, if you kind of break it down by race, for instance, you want to have a look at the average qualification level of your Afro-Caribbean employees, your Asian employees, all of the race categories of your employees, and then look at the job that they are doing and see if you can see a trend. Because if you can see a trend, then that's obviously going to indicate that you have high levels of underemployment. Obviously, underemployment is a huge, huge issue in the economy, because essentially what you're doing is you train your human capital up, you invest in training that human capital up, then you're not using that resource to its maximum. Right? So that's a huge impact, has a large impact in the economy. So equally you can do that and have a look at your underemployment levels to do with gender, to do with class, to do with any kind of protected or any characteristic whatsoever, and see if a firm potentially is underutilising its resources. So government intervention to kind of narrow down or stop discrimination in the labour market is vast, along with all government intervention to stop any form of market failure in the labour market through normal market forces. So over the next few lessons, what we're going to look at is labour market failure and government intervention to correct that labour market failure. Hope it's been useful for you. Thanks so much, and I'll see you next lesson. Bye!